Yeah. Friends, I welcome you all on this a great, unique program meant specifically for those who are members, those who are into the industries. And definitely the words may be coming from the panelists, those who are great enough, those who have traveled the journey in their career, maybe CFOs are above than that, or maybe naturally achievers in their life. CFOs unique perspective on business, technology, and the life. The words tree itself speaks so many things for the day, told for each one of you. And friends, we are really been great enough today. It's our pleasure to welcome our worthy president, our vice president, the passionate vice president with us, and the panelist and the moderator of the day. You see, like the president, though a president does not allow to speak much about the president, but to the words which really comes from the heart that you cannot stop in between, a blend of erudition, experience, foresight, technical expertise, and the professional excellence with emulating such a nice personality that we talk about always within the council or the within the council members. We speak about the qualities of our leadership which always gives and the serve to this profession. And our vice president, who happens to be a very unequivocal commitment for the profession and the passionate in whatsoever is been there with on his table, on his and naturally leading from the front. Those kind of personality with us as a leadership at the Institute of Chartered Accountant of India. And you see, like this is the 72nd year which is going on, which makes the difference so as an existence. My co-chairman is also with me, the Durgesh Kabra ji. I welcome you all. The panelist, V. Ramakrishnan ji, who happens to be a former CFO of the Tata Consultancy Services. Neeraj Basur ji, the Group CFO of the Blue Star Limited. Sameer Madan Sahab, Director Finance, Agilent Technology. Bhagat Singh ji, Senior Vice President with Oswal Woolens Limited and Chairman of the MSME Committee of the Punjab Chapter PhD Chamber of Commerce. The moderator with us is the Maitri Swaminathan ji, Regional Finance Controller, Asia Pacific of the Flo Daniel, a company originating from the USA and it's a global company. With these words, I welcome each one of you. Definitely, this committee, which is specifically serving to the members in the business with its all commitments, the new things evolving with so many new things which has been there during this year, whether it is in the competitive environment, whatsoever we thought of, it's the need, the strength to be built in with those kind of things, whether it is the techno-driven programs, whether with the futuristic approach. And you see, like global perspective, now we all are living in a global environment. We cannot stay behind. We have to be a stay ahead than the globe. And that is why our whether it is the Indian company originated from India, they have spread their wings across the globe. And the globe has also got the space in our own country, also in our own country. It's a those things. This economy is evolving in that manner. So friends, with these words, I welcome each and every participants, each and every my panelist, each and every the moderator also, and the leadership at the Institute of Chartered Accountant also. With these words, I'll request my Vice President of the Institute of Chartered Accountant of India for his word of wisdom and blessings to this committee and guidance further for this committee to be taken forward. Over to Vice President, sir.
Thank you very much, Duk sir, the chairman of this committee for members in industry, the president of the Institute of Chartered Accountants of India, Neha Jambusaria ji, Hansa Chuk sir, the chairman of this committee, the vice chairman, Durgesh Kabra, CA V. Ramakrishnan, Neeraj Basur, Sameer Madan, and CA Bhagat Singh, and the moderator, CA Maitri Swaminathan. To all all these chartered accountants who are from the industry, a special welcome to all of you. because all of you are such important constituents of the Institute of Chartered Accountants of India. Right. So you see, this is, sometimes this point is always said that you are more maybe inclined towards those who are in practice. It is certainly not true. And at the Institute, we try to reach out to those who are doing so well in the service sector, you see, and in the process, not only doing well for the company which you serve, but maybe, you see, towards, you see, your contribution towards nation building. You have seen Hansraj Chugji address us. His committee, that is the committee of members in industry and business, does such a lot of work to ensure that the institute comes closer to those members who are in the industry and business. His committee also does the campus placement. And campus placement, you see, what we do is this, and now again here you'll see the industry participating very, very actively in all the campus placement exercise that his committee does. And today in the morning when you were speaking to me, I said that we must have...
Recording has started.
I was saying that we must have more of such meetings, and I was congratulating Chuksa. And I was telling that we must have more of this kind of roundtables, because at the end of the day, I was telling him that our brand ambassadors are all of you. The 32 council members can, you see, shout and we can cry hoarse that we are a partner in nation building and whatever. But if all of you speak well of us, then you see, the combined voices of the institute and your voice is heard. And as a CFO, I take a lot of interest in the Companies Act. When Section 2, subsection 51 of the Companies Act came into being, you see, the CFOs were made key managerial personnels. And you see, that is a very important position, a position of trust that the government of India or the nation has imposed on the CFOs. And let me tell you today, a CFO is not only one who is authenticating the financial statements, who is a compliance officer, but to my mind, he goes much beyond it. And you see, he is a person who is taking a decision on the risk aspect. He is also a person who is, telling the audit committee about his insights of the operations of a company. And you see, he does it so well. He's also advising the board on various matters. And if you are the CFO, and something that we tell all the members of the institute, if you're going to provide value-added services, your voice is always going to be heard by the audit committee as well as by the board. So you see, today I think this my viewpoint. A CFO has gone much beyond of being merely a compliance officer. And over the period of time, we have seen at the institute people like us, like me, I'm in practice, but I have seen from far the important role a CFO plays. You see, in the well-being of an organization. I am very happy that we are going to have this panel discussion on the topic CFO's unique role in strategy and providing of new insights. And the topic that has been chosen by this committee itself speaks about the committee's belief that the CFO now has a role of not only in strategy, but also having new insights for the management. And I have no doubt that this panel discussion will throw up newer ideas, will ensure that you see the thoughts that we are having are shared, the insights are shared not only amongst the panelists, but amongst all those who are part of the audience today. I compliment this committee for members in industry and business, and its chairman Hansraj Chuk, the vice chairman Durgesh Kaburaji, for having thought about this panel discussion. And I have no doubt that those attending this program will be extremely enlightened and will go back feeling that you see you have learned something about which you were not aware earlier. I wish this panel discussion, this program that you are having, all the very best, and to all those who are listening to me, all the very best in all your future endeavors. Thank you very much.
Thank you, Dr. Saab Devasis Mitra ji, the Vice President of the Institute of Chartered Accountant of India. Such a nice words, encouraging words, and understanding the perspective with which this program is being organized. Friends, now we have with us the best of the person, the first person of this profession. We find it the place in the leadership. Nihar Jambusaria ji, the one word for him, the everything in you see like the strength, and not only the strength of a profession, but the good human being. Those two words, if combined together, that is the man with him, the personality with him. Nihar Jambusaria ji, the human, the best of the intellects, best of the mind. He is with us. Now I'll straightway request Nihar Jambusaria ji, the president of the institute, for his word of wisdom and the blessings and the words for this committee also. Over to President, sir.
Thank you, Hansraj Chugji, the Vice President of the Institute, CA Dr. Devasis Mitra, Chairman and Vice Chairman of this committee, CA Hansraj Chug and CA Durgesh Kabra. Today's panelists, Ram Krishnan ji, Neeraj ji, Bhagat Singh ji, Madan Samir ji, and the person to moderate this session, Maitri Swaminathan ji. In fact, this year, this is the first CFO meet. And up to last year, what we were experiencing that in the year, in different regions, we were able to hold not more than 4 or 5 CFO meets. So this year, when we were discussing about this committee, we discussed that on virtual mode, it has become easy to organize CFO meet, and particularly at such time when making strategy and bringing in new insights is really need of the hour. And I fully understand that making strategy in uncertain time, you do not know. COVID came, it melted down, again second wave came. In yesterday's newspaper, again there is news after 2 to 4 weeks, third wave may come. So the situation is so uncertain, and we do not know how it will affect the businesses and the economy. And in such time, to make strategy is a real challenge. Now today, of course, with all your experience, I see all experienced CFOs present here. With all your experience of so many years, you will be able to give different perspectives and different points of view, which will be very useful and value add for all those who are attending. But at the same time, I may like to point out that in this changing time, we were experiencing the power of technology, even the disruptions that it may cause for last more than 5 years. And we were all progressing towards adopting technology, making our members hands-on with technology. But in last more than a year after COVID, we realized that without technology, we are nowhere. We were afraid that technology will disrupt so many jobs and so many functions. But this was the case perhaps in 1986 when computers came to India for the first time, and chartered accountants started feeling that majority of our functions will be taken over by the computers. But with computers we have grown, with technology we have grown, and I'm sure that with artificial intelligence, data analytics, and all these tools which are now available, our position should be far better than ever before. And particularly when we talk of strategy, in uncertain times, we require huge data, the past, the future projections, and all these with the data analytics tools. It is easy to do than to do it manually. Apart from this, our government's focus, and in all countries of the world, the focus has now been more on sustainability. So along with financials, the governments are more worried and concerned about non-financials, like climate change, which is a threat to the existence of Earth itself, is a very big challenge, and all industries and businesses are told that apart from earning profit, you have to contribute to carbon emission reduction, you have to contribute to protection of climate, and with ESG and all these new policies, the job of CEO is very difficult and job of CFO is equally difficult. I have seen that after the COVID struck, CFOs are co-piloting the affairs of businesses with CEOs. Our role has expanded. There is more dependence on chartered accountants. I would also like to know from this panel discussion, what would industries expect from new age chartered accountants? You all would be aware that out of all those who pass every year, every 6 months, about 60 to 70% of them prefer to have a job in industry. So what kind of skill sets you would expect them to possess? At the institute this year we have set up a committee for review of education and training, and if you tell us, apart from our survey, we would try to incorporate all those skills which are necessary for the new age chartered accountants. So with this, I thank the committee. I congratulate that you have started with this initiative on virtual mode. And I am sure that we are all so much used to virtual mode now that this meet will be a big success and a very big value add for all those who are attending today. Thanks for joining and thanks for agreeing to participate as a panelist. Thank you.
Thank you, President Sir. Such a wonderful and the nice words. And naturally, as far as the need of the industry for the education and training and the how this can be given shape for the future, those definitely CFO will be contributing immensely. So with these words, I am very grateful and thankful to our president. Now I'll request Durgesh Kabra ji for the formal thanks to the leadership. Then the panel discussion will be taken forward with the support of the moderator. Over to Durgesh bhai. Durgesh ji.
Thank you, Chairman Ansaraju ji. It's wonderful to be a part of this program on the CFO, which is CFO's unique perspective on business, technology, and life. A panel discussion which we have planned in our committee, which is going to be addressed by the leading CFOs from the country, and we will have more programs of these kinds as is suggested by our president Neha Niranjan Jambusariya. And friends, let me accept this, and I also echo the same things what our vice president sir has said, that the role of the CFO has completely changed. Traditionally, CFOs were into a different kind of work involvement, which was related to mainly three things: books and records, financial reporting, and the statutory compliance. But now, this is not the situation. The today's CFOs is fundamentally different from the CFOs of yesterday. They drive the direction and success of organization. They work in using their knowledge and understanding the financial position of the company. But beyond financial position, what our president sir has told has now become equally important, that is with respect to the sustainability. And the role has further increased of the CFO, that sustainability reporting also will become the part of your financial reporting very soon. So the role of the CFO, which was there earlier, has completely changed, and now the older set of tasks continue to be mission critical but are now seen as the minimum requirement. But there are much more expectations from the CFO, and they are doing so, and the result is being seen by the industry and the enterprises across the world. I'm sure that this is going to make difference. So with this, the I thank the president and vice president of our institute for joining this inaugural session for the panel discussion of CFO's unique perspective on business, technology, and life. And I'm sure, friends, today the CFO who are already there, they will learn from the experience of these four, from this panel, which is led by these four panelists and moderated by Maitreyi. And I am also sure that the young chartered accountants who aspires to be the CFO and CEO of any organizations, they will also get tips today that what exactly you need to do in your life and in your professional working, so you reach to the level where you really want to be. With this, I thank our president, sir, and vice president, and I thank all the participants for joining. Around 2,800 plus registration is there for this wonderful program, and I'm sure all these members will be benefited after listening to all the panelists today, which will be moderated by Maitreyi. Thank you all.
Yeah, before Maitre comes in, let me introduce each and every our panelist and our moderator also. V. Ramakrishnan ji, popularly known as Ramki in his close group, but for us, naturally being a senior professional, the word respects comes from the name itself. He served as a CFO of the TCS during the period 2017 to 2021. Very recently, he resigned. He got retired or got superannuation from there. During these 4 decades of his experience, market capitalization, the numbers you can see, like it has doubled into, in the US dollar terms, 150 billion US dollar. He served as a finance head of the TCS North America for 7 years, helped the rapid growth of the TCS operation in the different regions. As a CFO, he drove financial and the operational efficiency, resulting in the sustained industry leading margins, strong cash convergence, and effective management of the currency exposure and the other risk also. Overall professional career spans of 4 decades. He has been a member of the ICAI, ICOAI, ICWI, ICSI, and SEMA also. He has won several awards in the past. He has regularly participated as a leader, mentor, and is recognized as a star assessor also. We welcome you, sir. The Neeraj Basurji is currently Group CFO with Blue Star Limited. He is a member of ICI as well as ICSI, certified member of the Institute of Risk Management UK. He has undergone an accelerated general management program from the ISB Hyderabad. Previously, he has worked with Max Bupa Health Insurance Company. A very large experience in the treasury, legal, compliance, investor relations, financial planning and analysis, corporate accounts, corporate taxation, insurance, and risk and the cost management. Welcome you, sir. Sameer Madanji, a member of the all the CA as well as CWS, CPE, currently working as a director of the finance at Agilent Technology a US listed company in the life sciences and the chemical analysis company. He has a passion in using data to generate actionable business insights, and he firmly believes that a trend is a friend that must be caught early to be a successful in business. Welcome you, Samirji. Bhagat Singh ji, a senior vice president in Oswal Woolen Mills Limited, which has a leading textile-based corporate house in India. He is our member of the Institute of Chartered Accountants of India, a passionate speaker, motivator, and an influencer also. He is the chairman of the MSME committee of the Punjab State Chapter. 15 years experience of strategic corporate expertise in the financial accounting, restructuring, treasury and RBI. Diversified experience in stock, mutual funds, and so many financial assets. They welcome you, Bhagat ji. Bhagat Singh ji, to you also. All the panelists are here. Now, moderator, Maitri Swaminathan ji. Our moderator is an accounting professional with 24 years of experience in financial planning and analysis, project and general accounting, with a focus on the energy and the construction industry. She is currently employed as a regional finance controller, Asia Pacific in Floor Daniel at Gurugram office. She is successfully executed process transitions to India. So many to her credit. She is a meritorious in the education also. Got rank in All India rank in the ICAI 38th rank, 25th in the final, 28th in the 38th in the inter, and same way in the pre-secretary ICSI examination also 8th rank in the both intermediate and the final level. That is the kind of personality the moderator also carry with. So with these words, I'll request Maitri Swaminathan, the moderator of the program, to take up the program to the next level for the benefit of each and every participants. Maitri, over to you.
Thank you, Mr. Chuk. Good afternoon, ladies and gentlemen, and I welcome you to the panel discussion on the CFO's unique role in strategy and as a provider of new insights. You already heard from Mr. Kabra, from Dr. Debashish Mitra, from Mr. Nihar Jambusaria, from Mr. Chug, on how the traditional roles that CFOs and controllers were for granted today. And what is expected of CFOs and controllers today is no longer limited to those traditional tasks. What is expected now is things like balance sheet optimization, driving sustainable business growth, technological innovation, improved governance, bringing business intelligence, partnering with the CEO, and ensuring returns on investments. So more and more, the role has kind of morphed from that of a chief finance officer to a chief value enhancer. So with that, I would like to invite our eminent panelists, CFOs of leading companies, to share their views and to kick off the session by sharing their thoughts on how they have influenced the strategy of organizations that they lead and how the role of the CFO has evolved over the years. I'll first like to invite Mr. Ramakrishnan to share his views. Mr. Ramakrishnan?
Yeah, thank you. At the outset, I would like to thank our institute and the leadership for inviting me for this program. And I also hearty welcome to all the other panelists, co-panelists on this program. I think as in the introduction, I had the privilege of being part of a very successful organization for the last 20 years, and in a very in an industry which has been growing rapidly. And at one point of time, the CAGR used to be around 25%. In recent years, it's been more like 15% in the. So this is an industry which has made a lot of inroads. So, and in the last 4 years, I had the privilege of being the CFO. I think the one critical role is as a catalyst for change, because the industry has not just the industry, the customers who we have been serving in multiple industries and multiple geographies around the world, the things have been changing rapidly. Either there are changes in their specific industries or macroeconomic factors, and as a result, you have to constantly keep changing your strategies as well in addressing the customer expectations. And technology by itself has been rapidly changing. So anything which is current today, within 4 or 5 years, it becomes completely obsolete, and it's a rapid change in multiple dimensions. So change has been a constant as far as the not only the company, as well as I would say even in the industry. So as a finance head and as a CFO, the catalyst for change and to make sure that we are a very valuable business partner to enable the businesses to understand and to get what you call the insights into the business operations, to be able to be forward looking, and to be able to provide that help is what has been very important. And so one is to make the changes in the processes, in the systems, integrate them as much as possible, and to make sure that you have real-time ability to have data which is of a high order of accuracy and consistency, and also to be able to make very intelligent insight out of it. I think this has been a very, very important role. This industry and particularly company has been blessed with strong cash flows, etc. So some of the challenges which certain other industries face in terms of working capital, etc., were not there. So a lot of focus has been on managing change, compliance, because we're present in more than 50 odd countries with myriad laws and changes happening. So compliance, risk management. So these have been very critical. And in terms of helping the business create a cadre of finance professionals who are embedded with the business teams and help them to navigate through the changes. And then, of course, that helps us also to be consistent as far as the expectations of various stakeholders are concerned. And that has also been responsible for the increase in the value to our various stakeholders. So I think this is what I would believe, perhaps a little longer answer than what you would have expected, Moderator Maitri. So, but sorry about that.
No, thanks, Mr. Ramakrishnan. Very interesting views. Catalysts for change, importance of compliances, risk management, very important thoughts. So thank you. And I will now request Mr. Neeraj Basu to share his views.
Like to thank the Institute of. Am I audible now?
Yeah.
Yes, we
Thank
can
you.
hear you.
So first of all, I would like to thank the Institute of Chartered Accountants for inviting me to be a panelist on this session. It's a great privilege. It's a matter of honor. I also would like to thank CA Hansraj Chugji, CA Durgesh Kabraji for their introduction to this subject, and the Institute's President and Vice President for their words. Coming to the topic which has been selected, it's a very, very relevant topic, and it is indeed in the current times and the times that have been changing, a very relevant and a pertinent discussion from the perspective of finance professionals generally and CFOs in particular. So the way I look at the role that chartered accountants and CFOs in whichever company, whichever sector they are placed, are poised to play as far as strategy and generating insights. It's a hugely impactful role because the entire profile of a chief financial officer has gone much beyond the basic compliances and ensuring the entire routine reporting and accounting activities. So the role now has morphosized more into being a custodian of governance and ensuring that governance focus and governance deliverables get the right kind of focus as far as the CFO's position is concerned, because the bedrock of from a successful strategy execution and a sustainable performance, the governance commitment to governance and the quality of governance plays a hugely important role. Connected with this subject is a subject very close to my heart, which is risk management at an enterprise level, because no strategy can be even successfully or sufficiently planned or executed or implemented unless the CFOs play a very critical role in helping or enabling the business leadership team to firstly understand the risk profile, which is there contained in the strategy, and also develop or co-own, co-create the response to those risks and how those risks will be mitigated, managed, controlled, or responded to, because that's a bedrock of, again, successful strategy execution. And in the world that we are all living in the last few years, the context and contours of risks have undergone a huge change. And that's something which is completely a non-negotiable element for every CFO to understand, to own, and to implement in their respective organizations. The third point that I want to talk about is around the shareholder value creation, because if there is one person in the entire organization who has a 34,000 feet view as well as a 10 feet view of what's going on in the organization, it's the CFO. And the CFO's ability to connect the dots, both looking back and looking forward, which puts them in such a unique position to contribute to shareholder value creation. So in that context, whether it is in the form and shape of ensuring, capital that gets allocated across the business, participating in capital allocation decisions, ensuring that the capital once allocated, what kind of returns that capital generates, and what kind of ROCE profile each business unit is delivering, is again an area where CFOs play and can play a very, very effective role. Being the custodian of, I would say in some ways, the balance sheet, more than anyone else across the company, the CFOs can and should consider using that as a very effective tool to generate or to create or to enhance shareholder value for the shareholders, and through that for all the stakeholders as well. So in my mind, the three levers that come to my mind, top of my mind, where CFOs are indeed going to play a very effective role in strategy execution or strategy structuring of the strategy, governance, risk management, and capital efficiencies around capital utilization are the top three. But of course, as we move along in this discussion, I'll be happy to share more thoughts. Maitri, over back to you.
Thank you, Mr. Masood. Very interesting thoughts on custodian of governance. I really love that phrase. And enterprise risk management, of course, and then shareholder value enhancement. So thanks for that. And we'll talk a little bit more about that in a while. But before that, over to Mr. Samir Madan to share his opening comments.
Sure. Thanks, Maitri, for moderating this important session, and hello to everybody else who's listening and to my co-panelists. I think quite a bit of it is already covered. See, as CFOs of finance professionals, we've always had a seat at the table. I mean, that's never been in doubt. But what we bring to the table now, more so than ever before, is the big picture, the bird's eye view, and our ability to predict. I think what is more important is to be able to predict the future. And I've always been a firm believer that data gives you the crystal ball for you to be able to reasonably accurately predict the future. It's a very, very globally interconnected world. And I think the key thing as a CFO for me is to be able to have a global grasp of this interconnected world, to be able to predict how my company should invest more in which areas. For example, the company where I work, which is a listed company in the life sciences and a biotechnology space, we invest 7% of our revenues in R&D. Unless I'm bringing out cutting edge new products, I'll be kicked out. The business models are changing so fast that unless I'm able to predict the trend, I'll be kicked out. I mean, you look at the composition of the Fortune 10. None of the companies today now there, were there in the 2000. So in 20 years, the Fortune 10 changes completely, or at least 80%. So as a CFO, I would say the first trait which we now have to have is our ability to have a global grasp and predict the future. Be ready for the new business models. The example I'll give is pay for use. Those days where you sell a machine or a big ticket item are gone. Everybody wants to convert every expense as a small ticket item. Nobody wants to have a machine. Even 30 years ago, the simple Xerox machine, the photocopier machine, earlier we were forced to buy it. Then they used to come and place it into your office. Look at every time you take a photocopy and they charge you per photocopy. And that's now even more so in everything. Digitization. I mean, we have to be the champions of digitization. We in finance know the end-to-end structure, right from the first inquiry till I convert that transaction into cash in my bank account. I think one example which I give to everybody, and maybe, for some of you who've listened to me earlier, is how Mexico as a country has overtaken almost every other country, even the advanced country. So in Mexico, every time a business issues a trade invoice, a soft copy, a digital copy goes to the government in a exactly similar format. Every time your customer makes you a payment, that particular receipt is also sent to the government. Now, what that has done is it's taken away any chance of underreporting of revenues. The government knows much better than you what your working capital is, and how easy is it for a bank to take a call on how much they want to lend, at what rate they want to lend, what terms and conditions they want to lend. So digitization again is something which we saw a long time back that is coming, and it's just the beginning. So that's another area where as CFOs we have to push our entire company towards it and be a collaborator and an influencer together. So collaboration and influencing is something which is critical. So with collaboration and influencing, your soft skills come into the picture. This is something again which is a paradigm shift. 30 years ago or 27 years ago when I started my career, communication, if you have it, great. If you don't have it, that's fine. But now without your ability to communicate, not just within your own country, but all through your stakeholders, chances are even if you're just an India only company, you have investors from all over the world, you have vendors, you have customers, the ability to communicate. Lastly, Maitri, what I'll say is that CFOs benchmarking. Again, it's kind of linked with the data, data or a trend being your friend, catching it early. But benchmarking is key. Look at how your basic cost structure is shaping up, compare it with your competition. To give you an example now, suddenly with pandemic coming in, my cost of logistics has gone up. With oil going up, with that machine or the ship getting stuck in the Suez Canal, all my supply chains were disrupted. Now I have to think of a near-term sourcing as well. Those days, which were not too far back, where just-in-time inventories were the order of the day. Now it's just in case. Anybody who had invested in inventories, made a killing. Now, you're not even getting your chips. So whether it's your laptop manufacturers, phone manufacturers, so keep benchmarking, make sure that your cost structure is in order. Because if your cost structure is not in order, you will be beaten by the competition. So these are things which have changed as the attributes of CFO, we being the custodians of the balance sheet, as one of my co-panelists said. But keep a hawk's eye view of each and every cost structure, be a collaborator, influencer, always have the big picture, and try and predict the future through the global grasp. And the amount of time I spend with my IT folks is unbelievable, because that's where, I tell them this is what I want, whether it's a new report they should generate for me, and more importantly, just digitize the end-to-end paraphernalia. And in my company, I can actually reasonably accurately predict the first inquiry, whether that will get converted into an order. We've data mined it so well from a new inquiry, which means from a customer which has never dealt with us, what is the chance of it getting converted? From the things they ask in a mail, something as basic as how much discount will you give? So a lot of interaction with IT. And finance and IT are going to become two sides of the same coin, even more so as we go along. These are my thoughts, Maitri.
Thank you, Samir. Very interesting. And thanks for sharing that about Mexico. I learned something new today. Thanks. And you spoke of influencer and you spoke of collaboration. And so I would invite Mr. Bhagat Singh next because he describes himself as an influencer. So I'd like to invite Mr. Bhagat Singh to speak.
You're on mute, Bhagat.
Mr. Bhagat Singh, you're on mute if you're speaking.
Now it's okay. Hi to all. I'm really thankful to the ICAI leadership. Now I'm audible. Am I audible?
Yeah.
Yes, we can hear you.
Yeah. Good evening and hi to all. Sorry for the late entry as I'm having another session. So, respected ICAI leadership, Hansraj sir, and other my co-panelists. So, thank you for giving me this opportunity to share my thought process. Though by age and by experience, I may be the least one. And I think my respected co-panelists have shared the macro view of the change in the CFO leadership. So, but in general, I would like to add some new points to it. In my opinion, CFO has become a game changer. CFO, by virtue of its traditional definition, Chief Financial Officer, 90% of the CFOs in India, particularly if you see MSME zone or in the bottom large cap stocks of the company, they are still obeying and following the traditional number crunching game and over spending most of their time in reporting and financial addressing. But this is not what India is looking at. We have gone through an entire revolution in the CFO role. And this revolution, this transition has been not brought by any curriculum or any order of the government. This revolution in the thought process has brought by the market's ecosystem. This is what market is expecting. Now, today, the CFO role has become more dynamic in nature. Or should I use a word? Recently, I have seen one ad where it said we require a CFO with a digitized mind. So now we need a person who is equipped with a digital techniques, a digitized mind, who can guide the management on all the four fronts, not only the balance sheet. Balance sheet is only one of the key component which he is required to do. The rest of the thing, he's supposed to address the business resolution. What are the products we should manufacture? What are the, as Samir said, like what is the next need of the next new India and the entire globe next 5 years to come? So let us spend on RI. Let us discuss. So spending an amount on RI is not a duty of only the research team. CFO should lead it out. Similarly, CFO is the key person in redesigning the entire SOPs of the business. And this has particularly come true post the pandemic. We need to revise the SOPs because the business structure, the working capital cycle, the licensing has completely undergone a change. And CFO has to understand it. This is a role which is a demand of a market. It is not a requirement of some statute. So if CFO, being the top leader position, if performs the business role, the marketing role, being an advisor to the company, definitely it is going to add a substantial portion to the ROC and ROE. And stakeholder particularly, we always make a CFO not only accountable for the low numbers, but also want to understand why the business has performed low. So if a CFO is digitized in nature, have a market perception, so he is in a better position to answer to the queries of the stakeholders. I'm also heading, I just would like to share one personal insight with all the panelists and the participants. I'm also the treasury head for the entire group. So we invest in India and across the startups in Dubai. So whenever we invest, we always look for one key thing. Who is the head? Who is the CFO? Who is the CEO? Because founder always want to go ahead, but he need a supportive system to go along with it. So how that CFO, what is his perception? Whether the CFO is digitized, whether he is watching the developments in the entire globe, the extent of usage of the skills, and if yes, we definitely go for it. Otherwise, we don't make any investment simply on the basis of credential of promoters. This is what a CFO needs to understand. And our CFO members, our CFO fraternity who is listening and attending this session, Friends, we need to understand this, that this is a change which has to be adopted at a very fast pace. If we keep on spending our time in number crunching and financial reporting, we will be far lag behind, and market will not give a recognition which we deserve at present. So kindly let us kindly listen to the views of the respected co-panelists and what the market requires, and make that changes adaptable to ourselves, so that we becomes a brand image of ICAI in the market to come. Thank you. Thank you, Mike.
Thanks, Mr. Bhagat Singh. Very interesting thoughts on how even investment is attracted based on whether the CFO and CEO have a digitized mind. So very insightful thoughts there. So thanks. I would now, I'd just like to start the session with a request to all panelists to type their questions on the chat box. We will be looking at it and inviting responses from the panelists as we go the session. So my first question is on shareholder expectations. A 2016 study by McKinsey reported that 4 out of 10 CFOs spend most of their time on strategy, transformations, and other non-finance areas. So the expectations from CFOs are very clearly changing. And Mr. Basur, you spoke about CFO's role in shareholder value creation. So I'd like to invite your views specifically on this subject, on CFO's role in shareholder value creation.
Sure. Thank you. Am I audible? I hope so. Right. So this is the study that you're quoting. 40% of the CFO's time being spent on strategic, activities and tasks, and probably 60% on the routine compliances has certainly undergone a change. So what is the CFO's contribution to value creation? Let's talk a little bit about that. And how can a CFO influence how shareholders can optimize their value from the investment? Because end of the day, be it a listed company, whether it's a privately held company, there is somebody has invested and they are expecting a certain return profile and an appreciation profile from their investment. So certainly it is where the CFO has to play a big role in firstly trying to assess and understand whether the underlying capital that is getting allocated and invested is aligned with the shareholders' returns expectation, and whether there are sufficient safeguards in place, whether there are sufficient, again, I come back to the risk management part of the discussion I had earlier. What kind of risks is that capital exposed to? So that's one part. Whether there is, the role the CFO can play to get the business and the leadership team to manage those risks effectively, mitigate any exposures that might continue to emerge, and through that process, ensure that the return profile is not only sustainable, but is also continues to grow year on year. Because if the capital is going to be used effectively and efficiently, obviously then there is it has a reflection on the overall capital reinvestment capability of the business as well. So from that perspective, whether the business is identifying opportunities which are in line with its growth aspirations, whether there is sufficient opportunity to run a business that is going to generate economic value, or whether the business is going to erode value. So all these assessments is where finance people or CFOs need to step in, understand, and then use those insights, use the insights from the own performance, benchmarking externally, and then help the board, help the leadership team take the right decisions, take the right calls on using that capital intelligently, smartly, and efficiently. Because end of the day, while on the one side capital is scarce, because nobody wants to put money into investment opportunities where it will generate suboptimal returns, at the same time, for a good idea and for a good value creation idea, there is enough and more capital also available waiting to be invested. So that's the role, and that's where the interesting thing is, now just to make it a bit real, whether at a portfolio level, at a company's portfolio level, what is the quality of assets? Whether the assets are economically deployed, whether there is a suboptimal usage of assets, whether assets are whether there are any non-performing assets creeping up. It is the CFO's ability to just have a visibility of the quality of assets and alert whoever needs to take a call, take an action on making those assets more effectively used, or to weed out non-performing assets as quickly as possible, is what is going to generate or enhance shareholder value. There's one aspect where, again, in this context, where we've had some learnings, I guess, as a country, as an economy in the last few years, is around the asset and liability, matching or mismatches, which should not or could not have gone unnoticed from a CFO's eye. So whether a business is building up a liability profile which is completely unmatched to the asset profile. So there are these technicalities aside. The point is that the CFO's contribution to making sure that the asset allocation, asset utilization, asset deployment, performance, insights relating to performance are all firstly understood, and they are explained back to the decision makers, and then to the board, because finally it is the board which will take a call on some of these aspects.
Thank you, Mr. Basu.
Maitri, if I may just add, I think what I've learned in my life is the smartest advice often comes from our own shareholders, especially the institutional ones. In the company where I work, I always am asking my boss to tell me more about what happened in the analyst meet. Once in a year, you invite your top 250 shareholders. So especially the larger ones, the institutional ones, especially the hedge funds in the US, the amount of scrutiny they do on my own financials, they put me to shame. And it's unbelievable how much detail they have. And these days, you have separate verticals within the Morgan Stanley's and the Goldman Sachs and the JP Morgan in the world. So we learn a lot how to deploy capital, what we're doing well, what we're not doing well. Just thought I'll flag that.
Absolutely. The investor is basically the one we have to keep happy, right?
No, not just happy. I think Samir, I think you touched upon it. It's more the communication, because I fully agree. I think the amount of data and the information that they have, but they reach there because you also have a very important role in communicating very clearly, enabling them to understand your business very well. So finally, whatever my friend Neeraj talked about, many of them are internal in terms of improving business performance, sweating your assets, asset liability matching, all of that. But ultimately, shareholder value gets created when in the eyes of the investor. So that is where the role of getting that message across very clearly, as well as enabling them to understand your business with all its pluses and minuses in a very good manner, so that they are able to make those informed decisions. And the third, last one is markets don't like surprises. So whether pleasant or unpleasant, you need to be sure that your messaging has to be very, very clear. It has to be truthful. It has to be consistent. It has to be the most relevant. And so I think that's very important in creating that value for the shareholder.
Maitri, can I add something to this view?
Absolutely.
Two things. First thing is, I'll add a point to Samir's view, that as he said that the main learner is basically the investor. So I can share with you one example. We have one company into which the top line is 700 crores. And the ROE, the profitability is very good. We always appreciate it in the market. But whenever we talk about our ROE, so the shareholders always dislike it. So one of our shareholder from an institutional space, they advise us that you are not a good company for us, we will not invest. So we solicit the reason for this. In spite of being the top notch in that sector, in spite of being the top rated company, why we are not the best? So they told me one reason in Bombay. Bhagat Singh, your top line is 600 crores. My dear friend, your business is earning an EBITDA of 18%. but you have 200 crores of investment parked in FDs, which is giving you 6% return. So there is entirely a mismatch. So why we should invest into it? You guys are not able to deploy that 200 crores, which is giving you a deficit of 12% return. So you have to focus, and that is the best thing. So what ultimately I want to say is we have to welcome the critics also. They are the two inspirational teachers for us. And as what Neeraj sir told us that how a CFO adds a value, मैं इसके बारे में आपको एक बात कहना चाहूंगा. हमें अपनी सोच बदलनी है. जो पुराने हमारे CFOs हैं, बेसिकली उनको ये लगता है कि our duty is certification of balance sheets, preparation of balance sheet, getting them quarterly certified, audited result, offline publication, that's it. But agar hum, believe me, that CFO is having the best of the data crunching, best of the data about fixed assets, about raw material consumption, about the usage of current assets, working capital cycle. So if we try to have an analysis, we don't do the analysis. If the CFO tries to do the analysis of the data and put forward that data to the leadership team, believe me, a miracle will take place. Because so much data is available in one division. Normally, the data is punched by the account section, given to the research team for analysis. So in this case, CFO is himself the manufacturer of data. We know the key inputs. So we are the best person to analyze. If we literally go beyond our duties and try to utilize that punch data after doing the data mining for the benefit of leadership team, we will definitely be able to get some surprise results, which will enable us to either rectify our mistakes or bring the best solutions to the management.
Wonderful example, Bhagat, you gave. So, Maitri, I can tell you that in my company, a lot number of acquisitions which we've done, the nudge has come from our investors, because they've seen we also having so much on tons and tons of cash lying almost idle, because in the US you get literally no return. So even tips on which company to acquire comes from your top investors. So learn from them. They are your best critics, and I love interacting with them. Whenever I go there, I want to know more. What did they ask? What did they ask?
In fact, just to add one more point, if you are not able to deploy that surplus cash in your business because you don't have a requirement for it, then your capital allocation policy should be robust enough, saying that you return it to the shareholders.
Yes. Yeah, that already has been done.
Yeah, it is there. You return them through cash, dividends and stuff like that. But ultimately, the thing is, what the investors tell you sometimes is so out of the box, out of the world, and they put you to shame. Why didn't we think about it? And, they come up with small companies from somewhere that look at this, and when you look at it, it is completely complementary to our business. Because
Yes,
acquisition is a very, very scary thought. 9 out of 10 acquisitions fail. So you have to make sure that whichever company you're acquiring complements your business and doesn't eat into your own existing market share. Great thought, great example.
But actually, what is actually the problem is, I hope that all the panelists will endorse my thought process. CFO personally keeps himself all the things with him. He spent 8 to 9 hours in data creation, bunching. He never gets a free thought. And you and the management will grow when you will spend more time on analysis. The problem is this. I had a meeting with Ramdev ji, and he told me one beautiful thought कि जो काम करते हैं वो सोचते नहीं और जो सोचते हैं वो काम नहीं करते. So basically these are the two different individuals. One will prepare the data and other will analyze it. And if you disintegrate these two thought process, believe me, the analysis is going to be marvelous and results are going to be superb. Thank you.
Thank you. I'll just move on to the next question on technology. So we spoke of how assets and investments need to be analyzed, but now we got IR 4.0, the industrial revolution, which is literally here now, and we see so many changes in technology: blockchain, cloud computing, open banking, digitization of tax, Bitcoin, so on and so forth. And manufacturing organizations, of course, are looking at Internet of Things. So as CFOs, how can we embrace these changes? We spoke a lot about how, digital mindset and how the digitized mind can help. So how can we help the organization embrace these changes? Also, how do we evaluate investments in technology? Because technology is evolving so rapidly. So traditional measures like payback period or things like that may really not any longer be relevant for evaluating these investment decisions. So your thoughts on how we can evaluate these investments?
Can I go first?
Yes, sir.
All right. Right. So investments in technology, let me take it in two parts. One is for the business side of that technology, where the technology will be absorbed. The other is the financial management side as well. I want to talk about that also. So as far as the business impact or the business technology investments are concerned, clearly technology's role in making the business processes more efficient and less onerous when it comes to being scalable or not being scalable. There's a huge role. Now, in the case in point is last 1 year. One of the reasons, if you look at insurance sector, the insurance industry, I'm just taking one example, has had the least disruptions because the entire right from policy acceptance to policy issuance to policy fulfillment to claim settlement end to end. Similarly for the banking sector. So sector after sector, if you take examples, because the technology focus has been high on the business processes, it is this payoff where in the event of a disruption, your business still continues is one dimension of looking at it, because the traditional, let's say, parameters around ROI or IRR might not be able to capture the impact of business discontinuity in case the technology is not going to be there. Another case in point is a bank which is currently, facing a challenge in terms of scaling up their customer base because of technological challenges. So it has a huge impact on the strategy execution in that sense. You also talked about the manufacturing aspects, the new industry 4.0. There clearly, whether it is deploying the technology in making the production processes more efficient, Internet of Things. How does the entire stock management happen? How to also basically it's about productivity. End of the day, technology is going to help make business processes, operating processes more productive, more effective, less wastage, more scalable. So clearly, as a CFO, I would always want to support any such investment where I can see the payback happening, not necessarily in terms of the traditional parameters that we would have, but also superimpose the elements of what I talked about in terms of contribution to productivity, efficiency, business continuity, and what is the long-term impact on strategy. A little bit on the finance processes and technology role in the financial management. I guess we need to think beyond the ERPs. So clearly we've always been, we always felt that from a manual set of accounting environment, moving on to ERPs was the best thing possible ever. Now clearly that has happened, and everyone has been in that environment for long. I guess now finance processes need to take the next leap, where deployment of robotics, process automation tools to make sure that any task that is repeatable, rule based, and can be handled better by an RPA gets transformed and gets transmitted to an RPA, and moving on to understanding how does financial data in and outflow get connected through APIs, be it the external view or the internal view. So a lot can be done on the financial processes in terms of automation. Another aspect which is very important, again in the context of what are our deliverables, is around controls. So typically we've had control focus for all the right reasons, but then what we need to introspect, step back, introspect. How many of our controls are manual still? How many of those controls can be automated? So that then once you're in an automated control environment, the degree of assurance you get from the process is huge. Move away from being into a detective control environment and move into a preventive control. So the moment this matrix of preventive automated controls starts becoming a reality as far as the financial and operating processes is concerned, the assurance on the process outcome is huge. And that's what starts giving a lot of comfort to the auditors, the directors, and even the quality of reporting that goes out. So there is a huge contribution on automation from where I'm looking at it. And these are all, again, I talked about governance focus. So this technology will play a huge role in supporting, enabling, the quality of governance eventually. And I guess everyone probably will need to introspect around some of these lines.
Yeah, Ramki here. I think in addition to whatever Neeraj said, and I also want to touch upon what Bhagat said, see, the critical element is in terms of, I fully agree that ERP is a generation back. Today, integration is the name of the game. So you have to have digitization end to end in the enterprise, and which means whether it is the customer or your partners, your vendors, your suppliers, your employees, or interfaces with the government, every bit of it has to be digitized. And once you have that and you have a very integrated view, then the question of what Mr. Bhagat was talking about, finance being manufacturer within quotes or creator of the data and giving it, all that goes away. The days are gone when you have a financial accounting and an MIS being two different set of systems. Today, there's an integrated. You record a transaction once, and from there, all your slicing, dicing, everything you do. The one question which will be asked is, okay, these require huge investments, and can all companies of all sizes do it? The key is to adopt technology again, where in terms of either cloud or I think as a software as a service, or you pay as you use, these tools are available today, which means that not all organizations have to invest all that money upfront, either in the systems or to create the hardware, software, etc. You can actually piggyback on systems where it is available and you pay based on your usage. And the other area, of course, in terms of data analytics, I think the huge benefit from that, especially in the area of controls, I think what you talked about, the use of analytics to sift through huge amounts of data and get those patterns and to look at where there could be the red flags, because you cannot do 100% of transactions verification, whether it is manual or by any other means. And third, lastly, you talked about RPA, but it is beyond RPA today. It is more cognitive in the sense that the system can look at huge amounts of data and look at the patterns and to also predict where it can go wrong, number one. Two, if there's something goes wrong, to diagnose and even to self-correct. So to that extent, automation has developed. RPA will help in repetitive tasks where it is rule-based, etc. But cognitive automation, and then that you can use in conjunction and especially to run huge amounts of analytics, and you can do all of it on the cloud. So these are huge technologies which are available, which can help in this whole journey.
Thanks, Mr. Ramakrishnan. But, integration of technology and all is fantastic. It is definitely the future. But the other side of the coin of embracing technology is the risks posed by cybercrime. Cybercrimes also evolved over the years. Earlier, they used to target stealing identities, like it was basically third-party fraud. Now it's becoming, it's literally hitting the company, where we've seen, in case of the Colonial Pipeline hack, where the company had to pay around $5 million in order to get their system started up again. We've seen that happening very recently. So there is a cost also of, taking cyber insurance, of choosing the right technology, putting the right controls in place to ensure that we are safeguarded as a company against all these risks. So your thoughts on where we see all this going in future as we adopt technology, as we adapt to it, as we, invest in it, the other side of how should we take care of cybercrime, because that also falls on the CFO too.
Absolutely. I think it is a topmost risk, I think, across industries and across companies. The threat of cyber risk As also one more area, which is the data privacy, also which is becoming important. And as we invest in technology, the ability to detect and prevent these attacks is extremely important. And if you are attacked, how do you recover from it? I think across all these three dimensions, there is a technology, of course, is also every day there are new things which are emerging to be able to use those tools. Second is to also the behavioral aspects within the organization in terms of having zero tolerance towards any deviant behavior in terms of lax controls or negligence. Plus, also spreading the word on what is a good behavior, especially because to avoid the being vulnerable for these attacks. So one is the technology, then is the people element as well, behavioral aspects. You touched upon insurance. I think it is very valuable, especially large organizations where it is not just your own systems which can be they brought down, but also you're working with customers. You talked about the colonial pipeline. It actually virtually brought to a standstill the power generation and distribution in large parts of eastern United States. And so you're dealing with customers and it can affect them. So insurance is also, the good thing about insurance is it's not just the cost. The good thing about is the insurers and the reinsurers do not want to write policies unless they see that you have sufficient systems within your organization. So just like I think Samir talked about the investor community and the analysts and institutional investors educating you as well as keeping you on toes, the insurers also make sure that if you have invested, you have the right policies, the right processes to be able to manage this risk. Unless they are there, they are not going to even write a policy. You can pay any amount of fancy premium, they won't even write a policy because the risk is very high. So I think I would say that this is another in your quiver, another arrow in your quiver. But you cannot rest on insurance. Insurance is only one area of defense. You have to do what is right within the organization in terms of adopting the technologies. The third, one more element is to also use the ecosystem outside. There is a huge alliance of experts as well as governmental help, CERT, for instance, in India. So where you can actually draw on the technical expertise and how to manage some of these risks. But one of the biggest items, and I think CFO as part of their risk management plus the CXOs just cannot take their eye off this.
Matri, I'll add. So it is actually the survival question. Cybersecurity is actually survival. So any company which is spending less in IT, every auditor should flag it out. I would look at the spend in IT as a percentage of revenue. Then within that, the line item of the spend. And I think Neeraj talked about a leading bank in India. If their websites and apps are not working, I don't know how much are they spending on their cybersecurity. And especially for banks, financial institutions. The utilities being down even for a month is bad. But imagine, your bank getting hacked and, money getting stolen away. That's so critical. And even as practicing chartered accountants and these big fours and every other firm, look deep into cyber security. There are enough tools available. In my company, the moment you have a login from a funny IP address, gets blocked. We have now added some dozens of extra gateways. We are also training the workforce. I think Mr. Krishnan talked about that you have to educate your workforce. It's not just your IT guys who are responsible for your cybersecurity. Security of your laptop, security of your mobile phone. Now it's bring your own device, right? So make sure that you have everything covered. It's your existence at stake. Every company is a technology company. Be extra wary of stuff on the cloud because, not only are you dependent on your own cybersecurity, which I'm hoping you will be right on top, because I'm paranoid about cybersecurity. So you have to also choose the cloud vendor also, and keep doing testing. As a mandate, my company sends me phishing mail once every 2 months. I don't even know. That's how important it is. It tells you whether your guys know which mail to open, which URL to click. It's a different, and combining this with your previous question on automation, if you're not financially viable, you can't survive. If you don't have money to automate your processes, whether financial processes, manufacturing, first of all, your product will not sell. If you are having a manufacturing, paraphernalia which is not state of the art, who will buy your product? These days, everybody has enough alternatives, right? Competition creeps in, and there is nothing which you can't copy in the next 6 months, right? So you have to be on top of it, and numbers give it away. But trend is your friend. Look at your numbers. If a company is not investing heavily into automation, cybersecurity, get out of it. Yeah? And as a company, sell that particular division off. The other thing which is very beautiful is now you have to look at product line profitability, not just at your overall company profitability. Maybe it's time to shut down a product line. And if you analyze your numbers product line wise, you have all your answers.
Thanks, Amir. Great insights. I'm just going to get in a couple of questions from our participants here at this point, which are kind of related to what we are talking about. Ashish Gupta is asking that in risk management, whether the CFO plays the same role as the Chief Risk Officer plays.
I think it's a complementary role. Chief Risk Officer, of course, at a enterprise level to enable ensure that the systems, processes, the identification of the risk register, etc., has a role. But CFO, apart from not just from the finance function, but also is also a KMP. You have to certify, and to the board as well as the audit committee, etc. They look for you to also make sure that the risks are being addressed. So you have to work very closely, just like I think Samir talked about the CIO. It is also with the CRO. These are all very interconnected roles today. In fact, one leans on the other. At the same time, you have to have the governance of who is responsible for what. You're responsible for certain things, but you have to make sure that the others are also able to deliver. And unless that coexistence works without friction and without issues, this organization will not be successful.
I just wanted to add a little perspective. So what Ramki sir just said, absolutely valid. The way, this COSO 2017 framework on enterprise risk management talks about integrating risk management with strategy and performance. That is where the CFO, that integration word is very important in this COSO framework, and how to integrate risk management with strategy setting and performance management as well. That's where the CFO play a very, very critical role. As Ramki sir correctly said, in conjunction with if there is a CRO and clearly regulated entities like banks and financial services and insurance companies do need to have a separate CRO. Even if there's none, if there's not a separate CRO, then CFO is invariably double hat for that role. So that's where this becomes important, because unless these dots are connected as to strategy selection itself is done using the risk filters, and then of course performance management integrates back with how risks are being managed or any improvement opportunity that comes around. So it's a complementary role. I completely agree, and it needs to be looked at from a very larger perspective.
Thanks, Mr. Ramki. And
Maitri, just one. Isn't every role now embedded? Like, as a CFO, I'm also a chief HR officer. So those days where every role is watertight are gone. It's collective ownership. I'm also playing the role of HR. I'm also playing the role of chief marketing officer. So those roles overlap now. Leadership it's all overlap. I mean, you can't say that chief risk officer is responsible for risk and CFO is not. In fact,
Except
I would love.
Yeah, accountability has to be clear.
Absolutely. Yeah, of course, accountability has to be clear, but we have a role to play as well, definitely.
Thank you. I have another question from Mr. Govind Boundia, that how far is the CFO responsible legally in case the company has non-performing assets?
We lost you. I think you're. Maitreyi, you're muted.
I'll repeat that. Maybe I had a poor connection. I'll just repeat the question. Mr. Govind Boundia asked that how far is a CFO legally responsible in case a company has non-performing assets?
It's a tough one, right? I mean,
Sir,
Maitreyi, are you speaking anything? We can't hear you. There's a lag.
Yeah, maybe you want to switch off the video for a.
Okay, I'm done speaking. It's a question out there on responsibility of CFOs in case company has non-performing assets. And I think, like we discussed earlier, there's a collaborative responsibility of all players at the, at all levels. But I'd like to hear your thoughts on specifically the CFO's responsibilities.
I think the legal responsibility arises from deliberate misdoings, right? If there is a fraud or a misfeasance happening, then I think the legal responsibility cannot be
correct.
But I think genuine errors of judgment and in terms of where due diligence has been exercised but things have gone wrong, I think whether it's a CFO or any other CXO cannot be held legally responsible. But having said that, sometimes to reach that conclusion and to navigate through this process can be very difficult. So I think the more care you take when you take the decisions, at the same time be conscious that you cannot be risk averse. You have to take decisions, but to make sure that your due diligence is very thorough and we are able to take those right decisions, it becomes critical, because you may be innocent, but you have to prove yourself to be innocent. And there, how do you do that unless the base is right?
So I just want
So
to add
documentation and due diligence.
Yeah, just a little perspective on that. So while there are two kinds of NPAs, one could be purely business assets, which is where what Ramki sir said is absolutely in order, where obviously if it's an error of judgment, it's a collective judgment, and then everyone takes equal responsibility. However, if there are assets arising from, let's say, for example, related party transactions, where a CFO has a much better ability to evaluate whether that related party transaction indeed firstly is at arm's length, and secondly, or arm's length basis, and then secondly is in the ordinary course of business. If the diligence, if the CFO has done, so there's a fiduciary role to be played in such kind of assets. And if the diligence has been done adequately, and if the CFO has a reason to believe that either of the two or both of these arm's length principle and not being in the ordinary course of business are not being met, then to begin with, is the CFO discharging the responsibility by flagging it to the audit committee in as many words, without any fear or without any conflict in their mind? And then are they able to, or are they just getting along with the flow? So a lot of issues that we keep reading about, if you see, are probably also examples of some assets which could have been prevented. Creation of those assets could have been prevented if a little bit of speaking up at the right forum at the right time without any fear was getting exercised. So I see it in that context as well. Then, of course, those kind of situations might lead into a legal hassle also if things get proven otherwise at some point in time.
I think the messages we're getting are on empowerment, communication, documentation, and due diligence. So thank you for that.
And also the brand of the company where you work, right, Maitreyi? What is the process to decide? So it's your whole ecosystem, I would say that. unless you're comfortable. See, NPA will only happen. I mean, a fraud MPA will only happen if the ecosystem is under doubt, right? I mean, which means either the promoter or somebody is, colluding with a certain set of people. So that's the fundamental thing. Work for a company where ethics are paramount, processes are set, and make sure that you speak up, as Neeraj said, that speaking up, having a whistleblower policy, making sure that you bounce it off on multiple other people who are more experienced in the system. Check with your auditor. If in doubt, employ a consultant and do all your CYA activities.
Thanks, Amir. I think what you meant is more like, culture eats strategy for breakfast. So, culture is, and the environment is equally important.
Absolutely. That's the paramount. Yeah.
So I'd like to bring in Mr. Bhagat Singh here because many small and medium-sized businesses have been going through very difficult times in the last year. And survey reports have shown that COVID-19 has impacted earnings of MSMEs by 20 to 50%, with the micro and the small ones being, maximally impacted. And the issues they faced are liquidity crunch, non-availability of labor, so on and so forth. So as they try to revive in the post-pandemic period, which we hope is sooner rather than later, many of our participants are associated with the sector, and we'd like to hear, how can the CFO play a role in the future success of these MSMEs?
To see, I'm audible. So as we talked initially, that CFO needs to be visionary as far as these companies are concerned. So if you study these companies, MSME in general, you will find 99% of these companies are unorganized. They don't have a written SOPs. They don't have a set established proper principles. They don't have a corporate governance setup. So the first thing they do, particularly post-pandemic, is the entire redesign of their SOPs. As far as the working capital customers are concerned, everything has to be put on a paper. They need to set up a system in place. There need to be a proper guidelines according to which the activities needs to be displayed. Accordingly, banks are also providing adequate liquidity support to the MSME, particularly if I talk about Punjab. So the Punjab government also has a plan to provide a liquidity support of additional non-fund or fund-based limits to enable them to export or produce domestically. So there are other state duties exemptions also, which enables them to provide additional liquidity support to generate more revenue. There are other welfare initiatives as far as the labor is concerned, which has been initiated by the Punjab government for the upliftment of the MSME. So the main activity, this is what a government side. I personally recommend to the MSME in Punjab that what they need to do is, first of all, their thought process should be clear. There should be a proper governance system. The policies to be in writing, as Amir said, their risk policies, their security policies. You will not find all these things in MSME because they believe in working unorganized manner. Particularly, they don't have a set accounting system in place. So these are all the factors on account of which the impact of pandemic was severe as far as MSME is concerned. The impact of pandemic was not that much to the large cap stocks. The reason being this, and if you study the research report of ICAI and CARE, you will find this pandemic has shifted the demand level from MSME to the large stocks. The only reason was that these people are not well organized. They don't have a well adaptable system, on account of which they feel the worst pain. So if they set up a proper system, proper security in place, proper financial system, banks, government is there to support them, and they will definitely be to bounce back at the earliest into the market.
Thank you, Bhagat Singh ji. I'd like to now talk a little bit about ESG, because that's topmost on everyone's mind, and even Mr. Nihar Jambusaria spoke about it. And I think investors, we spoke about how important it is to stay connected with investors. Now, investors have shown a lot of enthusiasm for sustainability, and companies are now turning to CFOs to start reporting and start measuring sustainability measures. So a lot of companies have adopted, catchphrases such as net zero, go green, and so on. So what are the means that we can do to measure ESG? To what extent have, solid steps been taken by Indian corporates to start measuring and reporting ESGs? Also, as manufacturing companies need to spend on carbon capture technology, how do we fund them? There are global concepts such as transition bonds, which have emerged as a tool to fund these green initiatives. But are these available to Indian companies? To what extent have they found traction? So can you share your thoughts on the evolving role of the CFOs on the ESG front?
I think, see, companies which have adopted integrated reporting have already gone through this journey, because in terms of not just identification of the measures, measurement, reporting, but more important, I think this BRSR becoming mandatory from 22-23, and I think it is voluntary for 21-22 for I think the top 1,000 companies, if I'm not mistaken. I think that is going to accelerate the requirement for companies to look at this even more seriously. And definitely, investors, rightly or wrongly, or some of them are very focused on your ESG initiatives and in terms of sustainability. I think there may be shades of opinion which say that there are the overemphasis. I mean, there's a recent instance of energy major, right, where the activist shareholders have got onto the primarily because of the ESG concern. But having said that, I think in India, I think, and with also the support, the institute has been helping in this, especially BRSR becoming mandatory. I think all companies of all, at least the large cap companies and mid cap companies, have to really do a lot more in this area.
Yeah, if I can add on the financing side, your question, you had a question by three. So indeed, financing options are available in India. There are banks who are focusing on ESG as a very close criteria. So there are different criteria, different categories of ESG compliances, and different categories of financing options. But definitely, a lot of banks are following what they're calling this net zero as one of their sustainability goals in terms of their financing focus. And a lot of investors also are looking at this lens as well. So projects, if they are, let's say, environmentally, if they clear the environmental context of end usage and end impact, the banks are willing. There are some banks, at least that I am aware of, they are willing to consider a favorable rate of interest and other terms as well. So that's a reality, and the overall the focus and attention on ESG as a subject, because the G of ESG, which was the governance, we've had frameworks around for a reasonable period of time. On the societal impact, again, we've had CSR requirements, and a lot of companies, big or small, have been doing things voluntarily. It is that E which needs a far greater focus, and then putting it all together in a sustainable business practice form is what is now needed. Early days, lot of awareness building, lot of education, and lot of discussions are needed first to get this understanding that what does it mean for me as in my business, and what can I do, how can I contribute, and what can I do more to be better aligned with the the responsible business practices or sustainable business practices is something we all need to do more work on. These are early days. Some companies are ahead in the game, but many companies are yet to make deeper inroads.
Maitri, I'll add that again, ESG is...
Mr. Basu. Thank you, Mr. Go ahead, Samir.
Yeah. The ESG, again, is built into your ethos. If the tone from the top is that they care, and hopefully they do, all companies want to give back to society now. Everybody wants to give back to society. And folks are now beginning to realize that environment is the key thing. Would this planet even survive if we are not going to change the way we live, the way we even think? Now, for example, my company, we have a huge campus in Manesar, which is on the outskirts of Gurgaon. We have solar power, in months where we don't have to switch on the air conditioning. We actually give back electricity to the grid. Now, that's one example, but the entire ecosystem is built on how your company thinks strongly about ESG. Whether it's, environmentally friendly campuses or practices, manufacturing, it has to come from within. we've not reached a level of maturity where, it's going to happen just by government talking about it or we as finance people talking about it. And in the social, the S part of ESG, I think while it's been talked about, but I would say diversity and inclusion are key for me. And diversity also is given. Do we have an environment of inclusion? And that comes back to every other question asked, like, is NPA a CFO's responsibility? Are we allowing an environment where folks can speak up whatever comes to their mind? Are we very, very inclusive? And I think it's something which is evolving, but is going to be the key differentiator within the next 5 years. Any company which is not showing their ESG commitment, which is not showing initiatives, and start both from the tops down and bottoms up. Somewhere in between, you'll reach there pretty soon. It's not just a tops down thing. So that's my take on ESG.
Absolutely, Samir. Thanks. We've got a lot of questions from viewers, from our participants, but I'm going to touch upon one very important question that's on a lot of participants' minds. It is that, we have a lot of young chartered accountants participating today in this program. So what is the CFO's role in mentoring the younger generation? And as CFOs, what is your expectation on how mentees should respond or reciprocate?
Just can go. I think you have it's a responsibility. I think developing the next generation, the next passing it on is important for all of us professionals, not just in the CFO or the finance role. And I think the expectation is one has to be a lifelong learner, number one. Learning doesn't stop when you clear your exams. So I think that is your first message that I would give to young chartered accountants, that you don't think that I've studied and cleared the exams and now that I can do what I am doing in my work environment. You have to make sure that you keep your knowledge base always current. On any topic, you should be able to comfortably speak for at least 2 minutes. When you try doing it, you will find that you will falter. It will not be so easy because you have to go back to first principles every time on every area. So that is a lifelong learning is very critical. And second is, don't look for instant gratification. This is a long haul. Stay steady as well as and build on your strengths and work on your areas of improvement. And success will always come to you. But don't look for that opportunity which is just giving you some 5, 10%, 20% somewhere and flip careers or jobs. I think these are two critical elements. And of course, wisdom doesn't only come with age. I think that is also something which the mentors should also recognize, that ideas can come from any part and from any part of your team. So one has to be receptive to new ideas and to be able to take that constructively. So, but lifelong learning, adaptability, and not going for instant gratification. I think these are some of the messages which I would like to give.
Yeah, Bhagat, if you're speaking, you are on mute.
Now I'm audible.
Yep, you are loud and clear.
Yeah, please. Mentoring is important. This is not true only in case of a CFO. I think mentoring is what differentiates between a leader and a boss. Mentoring is true in every case. As a boss, it is our duty to mentor our team. And as per my experience, what interactions I had with the leading icon in industry, I feel that there is a term which is known as insecurity. Most of the people who are designated as bosses in the industry, be the CFO, sometimes they feel like if they delegate a task, they inform the juniors, they may replace them in future. So this is a sense of insecurity which makes some people, because of which some people deter from delegating and informing or building the team. But it is on the other hand, actual fact is on the contrary side. If you develop a team, mentor them, make them understand the processes, make the answer of every why they ask, you are improvising yourself. You will have a more spare time to analyze and look after the other critical things happening in the company. As what we are discussing, the key role of a CFO involves not only accounting but etc. and etc. So mentoring is important for CFO, and to broaden our thought process, we have to believe that by mentoring the people, by mentoring our own team and the entire people down the line, we are growing to improvise ourselves. Nothing will go from our hand. We will not be retrenched from the company. So we have to be relieved from this sense of insecurity.
I just want to add to that, just if I may. See, there are two things I just want to talk about. First thing is, Ramki sir talked about learning. It's very important to recognize that skills have a finite lifespan. We all don't want to probably accept that, but that's a fact. So to give you an example, when I was doing my articleship, at that point in time, the books of accounts were written manually, and getting a trial balance tallied used to be a major achievement, and making a balance sheet manually used to be a big achievement in big specialization. Now that accounting skill, and myself, I've done many book writing assignments manually, is irrelevant now. Similarly, there are a lot of people who have grown up in an environment where the knowledge of the VAT laws across 26 states, 27 states, service tax knowledge, excise duty knowledge, experience, that skill is already waning off. So what do? We have no choice but to recognize that our skills as qualified finance professionals will undergo changes, bring that on board, and keep acquiring new skills. So skill acquisition, keeping in mind that my old skills will have a finite lifespan and they will cease to be relevant. That experience is relevant, not the skill, after a point in time. Similar situation is across all professions. Look at medical profession, how things have changed. So that's one thing, and mostly I have found that some people take longer to realize this part, and that's where the problem arises. The other part is to do with the fact that we need to have a growth mindset. It's just about the mindset. So learning comes along with that mindset. And for those of the participants who are interested, once you go back home after this presentation, search for Carol Dweck. There is a very, very powerful one-slide model by an American research. She's a psychologist, Carol Dweck, learning mindset. It's a very powerful model. Just take a printout, just put it on your workstation. You will learn a lot from there. So those are the two pieces of suggestions I wanted to give.
Yeah, Maitri, two quick things. Learn, unlearn, and relearn. The unlearning part is more important. I think most of us are stuck. Even if we learn a new skill, we somehow go back to the old one. So learn, unlearn, and relearn. What you learned for the first 25 years of your life, will not help you for the next 35 years of life. And the second thing, skill is very important. I think the new generation is able to learn, unlearn, and relearn. But what is even more important, according to me, is will. So skill and will are both important. And I think Mr. Krishnan pointed out that don't look for instant gratification and stuff like that. So skill has to be complemented with the right will. And will is working hard, not having instant gratification, respect, gratitude, taking people along. So live life holistically. And if you don't enjoy the life holistically, you will be not satisfied. Do what you love and love what you do. And then everything will fall in place.
Thank you. No, the way I think about mentoring is that excellent mentors we've had along our career. And I think being accountants, that's kind of a liability on our balance sheet, which can only be set off if, we pass that forward with, teaching more to our youngsters. So that's how I kind of think of this. It's been a delightful session, and it's been, wonderful. And it's been a pleasure and privilege to have you all here. Mr. Ramakrishnan, Mr. Madan, Mr. Neeraj Basur, Mr. Bhagat Singh. And thanks for sharing all your thoughts. But unfortunately, we have to take a time check. We are 5 minutes from the end of the session, and Mr. Chugh will hold me to ransom if I don't hand over the session back to him. So thanks. It's been an absolute delight to have you all here.
Thank you, Maitri.
Thank you,
Every
Maitri.
good things has to come to an end, and I really appreciate the way this particular session is being taken forward. A lot of knowledge for me also to understand with the responsibility as a true professional for the next generation also, which really been the need of the hour for each one of us. And the way this session is being deliberated upon, whether on the points related with the changes, the role and the responsibility of a CFO has been keep on changing under the dynamics of the changing environment, the global perspective of our professionals, whether it is the technology and the life whatsoever we need to possess with the younger ones, more particularly the strength of the knowledge, the strength of the mind, and going together with the support from the senior ones also. You see, like the mentor-mentorship relationship that we also understand with the Neeraj ji has well spoken with the time when we started our articleship. It was a days no technology. It was a days of that. It is. I feel like most of us, except Bhagat Singh, may be a different person. But the way we started with, once the trial balance tallied, so things was really been of a different mind. And the
Party,
once
it was a party when the trial
party,
balance tallied.
it used to be a party. And once the balance sheet has been prepared, whatsoever the manner may be, so things was little further. So those kind of things, and it's a journey. You see, like if we go back to the time before 1992, things were altogether different. It starts moving after we being a part of the WTO, and the role and the responsibility whether our profession or the other profession simultaneously with the change of the different laws, change of the environment, with the change of the technology, so many things has evolved, and naturally going forward, number of new things, whether it is the data mining, data is called as a gold now. It's a new word. Earlier, what used to be a physical, if you are having a building, like if you are having a big building, that means you are infrastructurally very strong. You have the power. But now that does not matter with. The cloud itself take care of it. You have a strong base database which, if analyzed properly and which giving back the results for the future things to be carried forward. That is the strength. That is the strength. This is the change, and the security matters. The role of the chartered accountants for the growth we all have to take together. Integration of the technology is the need of the hour, and these are the basic things which has come from. And I really appreciate each and every panelist from their own perspective has added so many in the minds of the each and every participants. And I, on behalf of the each and every participants, and on my own behalf also, and on behalf of my committee, I am very thankful to the each and every panelist, and the way effectively this Maitri has taken the session forward. I am very thankful to Ramakrishnan ji, Ramki ji, the Neeraj Basurji ji for the words he has shared with us. The Samir Madan Sahab also, the experience, the methodology he has brought us in the minds of the each and every participants. Bhagat Singh ji, to you also, and Matthew, to you also. I'm very grateful and thankful to each one of you, and to the leadership of the institute also, because the initiation of this CFO meet and so many things which are being guided by our leadership. And today we were fortunate enough, both our president and the vice president, they have spared time for the inaugural of this very program. And thanks to the each and every participants and the contribution from the our secretariat also, and the outside tech support also. So those are really deserves to be a thanks from me and my committee, and from the ICAI. I am very grateful and thankful to each one of you, and look forward for the greater support in the time to come as a mentor also for the younger ones, more particularly I'm talking about the panelist and my moderator, we have to be a mentor for the younger ones. They have to be brought best of the mentee capabilities in them, so that our sport can pave the way to them also for their personal growth and their contribution to the organization wherever they work with, or contribution to the nation, so that it is this profession are being given in return by each one of us. With these words, I'm very thankful to each one of you. Thank you, Maitri. Thank you, Madanji. Thank you, Neerajji. Thank you, Ramakrishnanji and Bhagatji. Thank you to each one.
Thank you, sir. Thank you, sir. Thank you all.
Thank you, sir.
Thank you, sir. Thank you
Bye-bye.
all.
Thank you.
Thank you,
Bye.
sir.